Hello everyone, my name is Rafael Rodriguez,
My name is Brock Schuler.
and today we will be doing problem E3-16 on whether it's a debit or credit.
E3-16 states the following accounts in alphabetical order were selected from the 2007 financial statements of Krispy Kreme Doughnuts. It says for each account indicate A, whether the normal balance is a debit or a credit, and B, the financial statement, balance sheet, or income statement where the account should be presented.
Okay, for the first account we have, it's accounts payable, and you would credit that, and the reason is because you are getting paid money.
Okay, the accounts payable goes on the balance sheet because it goes under the liabilities because you have
Okay,
to
and
pay
for the
off
second
something.
one, it's accounts receivable, and you would debit that, and the reason is because you are receiving cash from the payer or someone that owes you money.
Accounts receivable would go into the balance sheet because you are receiving something.
The next one is common stock. You would credit this account because it is the amount of cash for the items purchased by the stockholder.
The common stock would go into the balance sheet underneath the stockholders' equity section.
The next one is depreciation expense, and you debit this account because it's the total cost of the plant and equipment you have.
Depreciation expense goes under the income statement because all expenses go on the income statement.
Okay, next we have interest expense, and you would debit this because you owe interest money to any type of debt you would have.
Interest expense goes on the income statement because of the expense.
Okay, the next one is interest income, and you would credit this because the cash in these accounts earns some interest for the business over a long period of time.
Interest income goes under the net income on the income statement. It is the sum of all the interest earned on cash held in savings accounts or other investments.
Okay, the next one is inventories, and you would debit this account because it is something that is yours, which is at your store, ready to be sold.
Inventories goes on the balance sheet underneath the assets section because you have possession of these items.
Next is prepaid expense, and it would go on the debit side because it's something that you have paid ahead of time. For example, prepaid insurance.
Prepaid expenses is an asset that belongs on the balance sheet because you have already prepaid.
Okay, and the next one is property and equipment, and you would debit this account because it is something that a company owns and is currently using in the business.
Property, plant, and equipment goes on the balance sheet.
Okay, and last we have revenue, and you would credit this account because it is something you have sold for your business, whether it was a product or a service.
Okay, revenues goes on the income statement because it is something you have earned through your business activities. So if you sold a car for $15,000, you get that $15,000 as your revenue. All right, thank you for listening to Raphael and I, Brock Schuler, for E3-16, and I hope you have a good day and take care.